Transformation, Emerging Markets Perspective. And to do the presentation, I would like to call here Mr. Kasif Shahid, EVP and Head of Mobile Commerce, MCB Bank, Pakistan.
My name is Kasif and I'm delighted to be here. Thank you for having the opportunity to speak to you today. Pakistan and Bangladesh are both emerging markets. So what I'm going to share with you today is going to be extremely relevant to your market. I work for a bank called MCB, which is one of the largest private banks in Pakistan. We have 1,100 branches, 4 million customers, several hundred ATMs, 10,000 POS machines, 15,000 employees. And what we did was that about a little less than 2 years ago, we launched a mobile payment service for our existing customers. And in the time that we launched, to date, we have clocked close to 10 billion rupees worth of payments through this channel. 10 billion rupees is approximately $80 million. So it's basically an innovation with an annual uptake. Also, what has happened between that time is that we've been recognized for what we've done at several levels. Last year, earlier on in the year, we were nominated to be the best mobile payment service by the GSMA in Spain, Barcelona. In June, we were nominated to be the finalist by the banker as the most innovative service launched by any bank. And in December last year, we won the award of the best mobile payment service launched by any bank globally by the MMT Forum out of the UK. In my talk today, I'm going to try and attempt to share with you the insights that we've amassed along the way, and also the knowledge base that we are using now to construct the next generation of what we are calling the low-cost banking products and services. But before we start to talk about these things, I'm going to take a little bit of time in trying to talk about the market and in trying to draw a context, and would want you to feel the excitement and the urgency and the scale of an emerging market and the opportunities that they present to us. Oops. Sorry. I think I've got to a long space. Okay. Yeah. Okay. So now, for people with mobile phones or SIMs, and it's increasing at a very dramatic rate. But there are only 13% people that are banked, which is about 19 million. So there is a big delta there. People with mobile phones who have payment needs. And what are those payment needs? You don't need to have money to have payment needs. Your payment needs are that you need to top up your mobile phone. Your payment needs are that you have to receive a payment, or you have to send a payment, or you have to pay a utility bill. In Pakistan, there's a similar situation. We have only 30 million accounts, but we have 100 million people with mobile phones. So the gap is there of 60 million, very similar to Bangladesh and growing. The second important thing that is actually a common factor again in both countries is that we have digital ID cards in Pakistan, and 90% of the adult population has it. And the only thing that you require now to open a bank account or to have a mobile phone is to have that ID. And I've been told that here the digital ID cards are about 85%. So 85% to 80% of adult population has access to digital ID cards, which is a great thing, which can actually become the building blocks for the kind of financial inclusion that will happen through the mobile phone. Now, also in buying scratch cards or doing other electronic mechanisms to load their mobile phone, what does that mean? That means really is that people have the know-how of basic English language. They are aware of the English syntax. They know yes, no, enter, cancel. They're scratching the value off the card and they're loading that value into the mobile phone. That means they're numerically literate. That means they're aware of using the mobile phone and putting that value in the phone, which is again a building block for that transformation to happen. Now, the great thing about the new kind of literacy is that it's it's related to age. So the younger you are, the more device savvy you're going to be. And the more device savvy you are, the more literate you are. It's not about reading the newspaper anymore, it's about operating the mobile phone. So in Bangladesh, the average age is ridiculously young. It's 22 to 23 years old is the average age. In Pakistan, 63% of the people are under the age of 25, not far. So that's another huge demographic which is going to help. Now, this is an important point, and the visual is really interesting, and it talks about the nature of innovation. We have to understand that Bangladesh and Pakistan are not China or India. In China or India, there are over 1 billion people, and there are 400 million people each in both these countries with mobile phones. But the MNOs and the telcos have a long way to go. They have another 400 to 500 million people that they have to sell mobile phones to. But in Pakistan and Bangladesh, almost half the country already has a mobile phone. And there are 5 telephone companies operating each in both companies. And they've gone into price wars as they go down into the opportunity pyramid. So what's happening is that their ability to make money from the traditional voice channel is reducing, and it's coming to a close. And as they go down into the opportunity pyramid, they make less and less money. So what is it that they have to do? They have to try and innovate. They have to try and make more money through collaborations or through getting into the payment space or through value-added services, which is mobile internet and all of that. So a lot of innovation in the future, you would see is going to be driven within the regulatory framework that both countries are allowing, but from the MNOs and from the telcos. And that's again working in our favor given our sizes, which are very different than China and India. So what is the question that you must be thinking if you, or you should be thinking if you are a bank in Pakistan or in Bangladesh, or if you are a managing director or a chairman? What is it that you're thinking? What you're thinking is this. What you're thinking is that you know that the definition of scale in the banking space in these countries is about to change. So it's taken 63 years for Pakistan to open 30 million accounts, similar numbers for Bangladesh. But what's going to happen in the next 3 to 5 years is this, that in Pakistan at least I can tell you, and there is no reason why it should not happen in Bangladesh, there are going to be twice as many of these accounts going to be opened. So if twice as many of these accounts are going to be opened in the next 3 to 5 to 7 years, what's going to become of banks like NCB? NCB is a huge, giant bank right now. We have 20% of everything in Pakistani banking market, and we have 46 banks there. What's going to happen is that if we don't grow faster than the market, and we have to grow faster than the market, so if we don't grow our 4 million customers to 10 million customers faster than the market, we're going to lose market share. We're going to lose market share. We have 1,100 branches, we have POS network, we have thousands of employees. So there is no example in the world across any industry that when a giant bank, small or large, when they start to lose space in their own industry, then they will never come back. So really, the banks have to now start to ask the question, how do we grow faster than the market? And the answer really is that at the back of mobile payments and the execution mantra that we've adopted, that I'm here to share with you today, is about thinking big, starting small, and scaling up fast. And that's going to be the common thread as we go through the presentation, and I'd like you to remember that. Now, starting small first. So bankers, all of us, are very good at launching channels where customers can access their money through different means. So ATM is an example, call center is an example, internet is an example, ATM card is an example, POS is an example. The relationship continues to reside at the core banking level, and a new access point is introduced. That's exactly what needs to be done. That's exactly what a bank has to do when they get into the mobile payment space. So how did we do it? What we said was very simple. We said we are a large bank. Now any out of 4 million customers, as long as you have an ATM card, you can simply link your ATM card to your mobile phone. It does not matter which telephone company you belong to. It does not matter which handphone you have. You start linking your ATM card to the mobile phone and you can start transacting, and there are several things that you can do. And I'll talk about that a little later. So what did that do for us? What it did was that it cut through the clutter. The conversation was very simple. As long as you have a bank account, you can link it with your mobile phone and you can start to transact. So that's extremely important. If you are a bank, you need to try and come into a telco agnostic type way if possible, so that the adoption is across your enterprise. The second interesting thing that we did was just that we took the execution of the mobile payment space outside the large bank. So we worked with our partners, which is Fundamo, with their local partners access. And we said that we don't want the server on which the front end of the mobile payments is going to reside inside the bank. The execution inside the bank is always going to be costly. We all know that. It's going to take a lot of time. There's going to be banking infrastructure regularities, and there are firewalls, and there are all sorts of things. So for us, we took the execution out, and the front end layer is residing in our partner's data center. The third important thing what we did was this, that we negotiated a business arrangement with our partners which said that we would pay them for example, X dollar per year per customer. And in return, they would be responsible for the hardware, for the software, and for the infrastructure. What does that mean? That means that there was very little capital outlay as we went out into doing this new innovation. And we all know most innovations fail. So it's extremely important that you structure your relationship in such a way that in case things don't fly, you can still survive and make another attempt. So what's happening in this case is that your partner, your technology infrastructure partner, is actually buying into the risk of what the bank is taking in introducing a new service to the market. Because we took measures like that, we were able to get into a closed user group launch within 3 months of signing the business case for mobile payments. And within 9 months of launching the service, we broke even.